Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, April 23rd, 2018. We're heading into the final half hour of trading, and as promised earlier, I'm just going to do a video I wanted to put together, just share my thoughts. There's so much out there. It's a lot easier to get out in video form. As long as these videos might take at times, it would take 10 times the amount of work to screenshot dozens of charts to kind of give you the big picture, especially when I'm going over multiple things. So what we're going to talk on today, I'll just briefly touch on the stock market. I put up a lot of analysis on the front page today, both in video and static charts and comments in the trading room. So I'll touch on that and then we'll move on and just look at some of the sectors that stand out right now, whether they're trading ops or there's some developments worth noting, like gold, for example. I'm still standing aside from that trade, but there are some things that we should, that I think need pointing out right now. So we'll start with, after I go over a brief overview on the broad markets, we'll look at crude oil, lumber and timber, Bitcoin, look at the U.S. dollar, the euro, and gold. Try to figure out what's going on there and what to look for, and then I'll quickly, very quickly, run over the trade ideas. I'm not going to cover the chart on every single trade idea, or probably maybe only a couple. I'll just tell you how I think they look, and I'm referring to the active trade ideas on the site. So before we get going, this is a 60-minute chart. No, I'm on a 30-minute time frame of the Nasdaq 100 futures and Q E-mini futures, and there's the big picture, the trend line, the divergent high. There's a correction, breakdown, backtest. Everything has been covered. Charts are playing out well, and there's that alternative scenario that I talked about this morning. So far, it's in play right now. What I'm looking at here is it broke. That was a well-watched support level. Again, I already highlighted, what would happen there. And it seems that this may be playing out. It's a little bit early. I'll tell you what we have to do if you're, focused on the broad markets. We have this big green candle. That's what I love to see. Not just the fact we went through there. And I'll be honest with you, even though this morning this was just my alternative, but I could almost flipped a coin. We had a little rally up. My preferred scenario was upside, and it still is upside. It wasn't a matter of having a bearish and a bullish scenario. I was, still bullish, looking for more upside. And if I'm wrong, I'm going to be wrong if we go much below today's low. So let me just put it that way. I'm either right or wrong, and if I'm wrong, don't let it go. We're going to go, if we take out today's lows by a good amount, we could head a lot lower. I mean, there are some support levels below, but so far so good. I'm liking what I'm seeing, and I'll be honest with you, the fact that we did break down today, as long as Google doesn't blow up, after hours today and into tomorrow on the earnings, this is super bullish. It's more bullish than my other scenario. You might say, Randy, that's crazy. We were right here or somewhere, this morning, and you thought we'd go up. Why would a move down be more bullish? Well, because it did what I suspected would happen, and has probably happened. Like I said, it was a well-defined support level. Undoubtedly, a lot of stops on longs right there that have been hit, and probably sucked in some shorts. And what does that mean? Why is that important? Well, let's say you're going to drive across the state. If you live in the United States or where you live, you're going to take a trip, and you've been driving around. You're driving your car all week since you gassed up last time. You're going to have a much better chance of making it across the state if you fuel up, you put more gas in the car, than if you just jump in the car right now and go. Especially, of course, take my analogy. I live in Florida; it's a long state, so depending where you're going. And that is what happens here. When the market goes down, when you pull in shorts, and you also shake out some weak-handed longs, but more importantly, you suck in some shorts that short a breakdown like this. If the markets can continue higher, the higher it goes, they get squeezed out. Because I've always said this, if you're bullish on the market and you have money on the sidelines, you're a potential buyer, but you don't have to buy. For whatever reason, you may decide to just wait, stand aside. Short sellers, and trust me, I love short selling. I've been an avid short seller for years, so I know both sides of this. I trade long and short equally. You know, I love shorting and I love going long. Short sellers are the only natural buyers in the market, or the only guaranteed buyers, I should say, in the stock market, because they must cover their position. If you short a stock, you must buy that stock back, buy to cover. It's the only way to close out a position. Nobody carries a short position forever unless they don't. Even if it goes to zero, they're going to cover it, close it out at some point. All positions have to be closed. So there it is. That's what's happened so far. Nice green reversal stick here on this 60-minute chart, 30-minute. I'm sorry. More work to be done, but if that happens, and again, I had to caution you guys that with Alphabet reporting, more and more companies, there's a link to the earnings calendar on the front page. Check that. But if we continue higher, at this point, my minimum target right here, and this is of course the NQs. I'll get to QQQ in a second. I'd say we go up here. I haven't really fine-tune this chart, but I think we'll take out today's earlier high where we reversed and head up there. But again, a lot's going to happen, and the market's going to be closed before we get there today. We're not going to rally that far. I really doubt that, especially in front of Alphabet reporting. You're going to see traders sort of go in a holding pattern, but I like the divergences, everything else that I said. The fact that we've taken that level out probably sucked in some shorts. And so if we can continue to power on up, similar to my analysis on they put out over the weekend, it will confirm, a lot of these divergences and other potential buy signals. And again, we'll take it from there if that rally comes. And if it doesn't, plan B, if we go much lower, that's why I'm trading the NQs. I can stop out overnight. With Bitcoin, I tried the Bitcoin futures. My target was hit in the overnight session. I think that was the highs right around there. So I don't even think they saw that session. So that's one reason, especially during earnings season, that you have a little bit of an advantage trading futures. But you can always sell QQQ in pre-market and after-hour session. You just don't have the round-the-clock potential for stops there. Okay, and here it is on a 60-minute, nope, again, 30-minute chart. Sorry, guys. 30-minute QQQ for you QQQ traders. That was that big 160, 166 level. Love to find all those reactions there. So so far we ran it and then had a nice green. You can see if you look closely in 30-minute bullish green reversal candlestick. Nothing huge yet. It's still some work to be done. And again, this movie or this story will have to be continued tomorrow. Whether we rally some more into the close or whether we close around these levels. I can see the setup. This is a bullish looking setup, but we need confirmation. We need this PPO to cross bullish. We need prices to come up a little higher, especially if we take out that high, that previous high. Even if we get back above 163, I think that's where the squeeze will really start. The squeeze should begin when we get over here. But again, let's see what happens. There's another level if you guys want micro levels. If you're active traders, I can see some resistance right there. But Alphabet has the potential to change things tonight on the Qs and the market. All right, let's move on to the trade ideas and sectors that I'm looking at. Quite the reversal in CL today, but I'm still bearish in this one. I told you guys I'm really close. I'm waiting, for the right opportunity, and I'll probably add this. May wait till tomorrow because by the time I get this video out, I don't know if I'll have a time to get a post out and give you price targets on any of the crude ETNs. But I think this bounce is an opportunity to add to short exposure or initiate a short. Sharp reversal off the lows today. It wasn't purely random. You can see here we had some bullish divergence on the the PPO and the MACD. Here we had negative divergence. There was a rising wedge, and that's what I'm looking at. The move up. This was the high, multi-year high in crude, terminated in the 60-minute rising wedge pattern, breakdown, impulsive price action, everything you like to see. It must have been a news driven. I don't know if there was some inventory numbers or something came out today, maybe some headline news that looks like we reversed quick, and I'm sure there were a lot of shorts that covered there. But again, we'll watch where it goes, and I'll add that. I'll add this as an official trade idea if the charts really give me a high probability entry. Personally, I'm trading CL, but I want to add one of those ETFs soon as a swing trade idea. This is CL on a daily chart. I'm going to go to some crude ETNs in a second. This goes back years. I think you can make it down here, make out the years 2016, 2017 right here, 2018. So we're looking at several years. This is some other annotations I added. These were extreme long to short ratios. which have persisted, but we may have even exceeded those levels. But here's the bigger picture, and then I'll get away from this chart. Forget about those trend lines. Those were showing through from the intraday charts. I should have turned those off on this daily chart. But you can see a big divergent high. Still not yet confirmed. It is potential. Here's the PPO, MACD, RSI, all of them making lower highs with prices making higher highs. To me, this is looks like a pretty big top coming in crude, and that's why I'm looking at as a potential multi-week, probably multi-month swing short. But again, no reason to jump the gun. Like I always say, second mouse gets the cheese. I'm pretty nimble with the CL futures. I can get in and out quickly, but the trade ideas on the site, I know most people are not day traders or very active traders, so I try to reserve the front page posts, the official trade ideas, as swing trades. And yes, the market's been rapid, moving fast. So a lot of our swing trades have been hitting targets in a matter of days, sometimes hours, instead of weeks or months. But that's actually a good thing. But that won't continue forever. But again, I want to. This is on watch for a swing trade. And let's look at a few of the ETFs, and we'll move on. Okay, first up, here's USO. This is one of the more popularly traded, very liquid exchange traded products for trading crude. And you can see on the 60-minute chart, we had a divergent high right here. We had a little correction, but that's extended. So it's really, this is an extension of this divergence. And you can see the divergence is starting to steepen here from this point. So the lines, its prices made a newer high here. We had even, larger divergence. And if, for any reason, if crude happens to pop its head up, make a new high, and do so soon, that is, it will almost certainly be another divergent high. So these are the things I'm looking at. I'd rather, see a pretty solid evidence of a top on a daily time frame, not just a 60-minute, and that's when we'll get these trade ideas as official, get them out there. But by all means, if you like what you see, you might want to start. I know some of you have started short positions, so there it is. That would show you again if we continue to climb, soon to new highs. But we already had a divergent high, so we can reverse now. And we already had a divergent high here. Will we have an extension of the divergence on that 60-minute? Maybe, maybe not. We'll see. Daily chart. This is, you can see, just like CL futures I showed you a minute ago, crude futures, you can see the negative divergence clear as day there. The indicators, the PPO and the RSI making lower highs against prices making higher highs. And big green candle today, so let's hold off for now. Let's see what happens. See if they can reverse or eat this, take this candle out tomorrow. See what happens. And even if we maybe sometimes I'll go ahead and short a trade while things are still moving up. I'll add a short if it looks like a reversal is imminent. We can always short with a stop not too far above if these divergences are burned out. So I may actually even add on upside on if we get that divergent high on the 60-minute chart. And then I know a lot of people like these leveraged ETNs. If crude chops around, they don't do so well. But if we have a pretty swift correction, unidirectional, downside move in crude, DWT can actually outperform. It has the potential to outperform. So there it is. It looks like it's trying to pound out a bottom. This is just like that USO and CL charts in reverse. Instead of a bearish rising wedge or an uptrend line with a divergent high, we have a downtrend line with a divergent low, which is bullish. And you can see these are the potential price targets. So if you've taken a position or are starting a position, a stop somewhat below, you can help calculate. If you believe that DWT might make it all the way up to here to the $15 area, well, that's an 84% gain. Assuming again, if it gets there, relatively a swift move like this. When you have these moves, the 3-time leverage works in your favor, and you actually, in most cases, will do better than 300% or 3 times what the underlying index did. It's these choppy sideways trading ranges. This is when you get the decay on the ETF, especially this. This is when you do not want to hold something like DWT, a multi-month sideways trading range. But the nature of these patterns, rising wedges and divergent lows, all that are pretty impulsive and explosive. So my guess as we run up, hit the trend line, pull back a little, consolidate, run up, and then hit each of these levels with a little reaction there. So there's DWT. Let's move on to lumber. Okay, this is a 60-minute chart of LB lumber futures. You can see a nice big divergent high. You can see the negative divergence here. I should actually add it like this since I have, You do have divergence from this point here on that's the PPO. You have divergence here on the RSI. You have divergence on the MACD. So really there should be a line right there, the divergence line. So there's your wedge. Going back here, we even had a peak back here, but actually, so ignore this line. If you were to replicate this chart, this is how the wedge should look. So we're just right on that trend line now. We do have horizontal support below. You have this reaction high here, but if and when that goes, I think we'll work our way down. I think I had on the chart I showed you earlier. There's some support right there. These levels are so hard to make out. I need to change the colors. That's a little bit above 530. You can see there's about 519, so you'd probably want to cover around 520 or so. But I think lumber futures, and again, this wedge, it looks like a breakdown is imminent. You may have another kickback rally. This is only the third reaction, so maybe we have another kickback rally, and then you can look for a breakdown of the wedge and a decent move down. And now let's look at the some of the ETFs. Wood and Cut are the two ETFs. Now, keep in mind that unlike most, and I've mentioned this before, most of the commodity tracking ETFs and ETNs hold futures. In this case, LB, which I just covered, that's random length lumber futures, but there, to the best of my knowledge, is not an ETF out there that holds and tracks futures directly. However, what these ETFs do, Wood and Cut, they hold, this tracks the S&P Global Timber and Forestry Index Fund. You have companies, I'm looking at a list down below that are in there now, and I've overlaid this chart. It mirrors, there's a very strong positive correlation between lumber futures and these ETFs. So in other words, you get the trend right on one, you're going to get the trend right on the other. So you can see a long-term uptrend line off the early 2016 lows, and it's still well above trend. I've covered it quite a bit in the past. There it is. There's that trend line when I cut it off a little bit. It goes back to the left here. Divergent high. We're starting to finally roll over. See, I've been waiting for some decent evidence. You can see the PPO rolling over. In my book, it's only potential divergence because the PPO can turn back up and keep moving higher and then take out this divergence. But once you have the bearish crossover, you effectively have a lower high, lower than this previous reaction high back here. And that is what I like to say is confirmed divergence. Again, term I made up. I don't know if anyone else, out there uses that or if it's been in any textbooks, but I find, you're better off waiting sometimes unless I can identify a good entry, like I just showed you on the 60-minute chart of futures. This chart looks very toppy to me, and so there's a downside, some targets, potential targets down there. If we hit that trend line, which is my minimum expectation, is to come back in and revisit this trend line. That's about a 7% drop, and ultimately I think that trend line goes, and I think there's quite a bit of downside in wood. So that's another potential one on watch. I covered Bitcoin futures and the Well, it's not an ETF. It's actually a Bitcoin investment trust. I'll get to that here. Okay, here's the futures. Like I said, those have this pointed. I did an update today on the front page. I've been bullish from the back here before we broke out of the wedge. We broke out, back tested, just beautiful action so far. The gain in Bitcoin futures has been, yeah, off the lows, it's about 38%, so pretty good rally. But we all know Bitcoin, it's a volatile little sucker. If it's going to move, it moves pretty big in either direction. So bigger picture, let me clear that out. You can see this, we have a divergent high, and there's a target that I had up there. The actual resistance is around 90, 97. So as always, I set my sell limit orders early, a little bit shy of the actual resistance level, and I don't like the fact it has negative divergence on the 60 minutes. So, although I'm out, my order was hit last night, like 3 in the morning or something, and took me out. I might be interested in a pullback maybe to that level, but ideally back to this level here. Again, it's hard to say right now because this 60-minute divergence is really not even, only just barely starting to play out. And it's certainly, from the scope of that divergence, would project for a move back down there at about 78.64. So let's just see what happens. I'm standing aside that one for now, and ditto for GBTC. Here's GBTC. I don't, my primary trading account, I'll use futures. And I have IRAs and other accounts that I'll just use something like this. And this is Bitcoin Investment Trust. So it's done well. I was, pointing it out back here when Bitcoin looked interesting as a proxy play. And that one's rallied, also off that point about 48%. And see, the reason why, what's nice about it can be nice and it can be bad about GBTC is unlike an ETF that's priced where they take all the value of the stocks, they do a very good job up to the minute or at least at end of day, marking that, all the assets in that ETF and then pricing the ETF based on the security of the underlying assets. With Bitcoin Investment Trust, it will trade at a premium or a discount to Bitcoin. So when everyone's selling, what happened when everyone was buying back here? And I pointed that out at the time, saying this was a big bubble, a lot of hot air to come out. I don't know if we had an official short trade. I know we had an unofficial short trade idea on this, but you can see what happened here is it got way ahead of not only the big run in Bitcoin, but GBTC was selling at a big premium to the actual value of Bitcoin. And then when nobody wants it, when you have a correction, then you sell at a discount. Now, I don't know where it was right here, but that's the only reason. It was either at a discount and now it's priced closer to parity, or maybe it's priced at a big premium now. But either way, that's a big move. 15 was a target. We gapped up and opened up above that today. It's still there, 15.21 right now, but you can see nice resistance. So that those two reasons alone, that's it. I closed out all my Bitcoin futures, most of my Bitcoin GBTC, but I'll leave a little bit on because I do think it's headed up over time here to 2055. So there's a couple little small swing trade positions. You can see the divergence low, the divergent low, bullish divergence as well on the daily time. Okay, lots of movement in the dollar lately. You guys know that's, the dollar has been trending sideways for a while, like gold. I'm going to add a level here as I'm talking to you. Let me add a horizontal line. I just noticed a level. I should have had that mark there. This was support for a while back here on the dollar. So if we break out here, now what we're looking at, if you look down closely, here's a MACD. You see divergence or almost divergence, virtually flat line divergence here on the RSI and the PPO. But the most important thing, we zoom in here, look at this downtrend line, very well defined downtrend line, that divergence right there. And there's the recent trading range. So the dollar is at a very important technical level. This is the recent trading range. In fact, let me box it in for you, kind of show you. We've traded around this range, but the very top of the range, we did have a spike up out of that range recently. So although, I can draw a resistance line there, which was taken out today, you also have this previous reaction high to contend with right here. So we can go like this with this line. Actually, it should be a little bit higher. Let me try to get that right for you. You can see it if I'm trying to come from the left, that's why. There it is. So we need to pop there, pop above there, and you can see the dollar could break out, or like I always say, resistance is resistance until unless taken out. So there it is. You have the US dollar at resistance. It rallied sharply today. And, although I can see an ultimate breakout of this downtrend line, that could happen tomorrow, could happen tonight, or it could happen after another thrust down. Anything can go. But the bottom line is we continue to be in a sideways trading range. So like I've said, I've stood aside the gold GDX trade. Maybe if you're a super active trader, you've done well trading within this range. If not, you probably got chopped to pieces. So you just need to let the dollar pick a direction here and start trending, and that could happen again on a breakout above that level. I can add some other lines up here, right about where I'm holding 92. I could add actually quite a few targets there, but first level would be about 92.60 is where I would have a line resistance level. And this is US dollar index futures, by the way, if you guys are wondering what I'm charting here. And here's that Euro US dollar chart that I've been following for a while with the uptrend line off the early 2017 lows. We had a little fake breakdown, tried to regain it, and so far failed. But same story is that we have support below. We're also boxed in within a trading range, and the euro is the largest component of the dollar index. So there's your trading range. Even more recent, it's even tighter. So we're below trend, but there are some horizontal support levels below, as well as a pretty significant level here. If you look at that reaction high back from August, there's my number right there, 1.20943. That's the support there, so we need to watch. We'll keep an eye on this as well as the U.S. dollar index and even the yen. I watch the yen as well because the yen's the second largest component against in the U.S. dollar index. And again, gold, not much else to say. It's in this trading range. It's been in this trading range, and about the only thing that I've made mention that you can try in recent weeks is short the top of the range and buy the bottom of the range. That's what you can do until and unless the range breaks. And if you do that kind of strategy, you put a stop if you're shorting the top of the range, stop a little bit above, maybe on a daily closing basis to prevent these little fake whipsaw signals right here, these little brief moves. Or and if you go long, same story. There's support just below. You can see about 123.25. So sooner or later, gold will break out, and sooner than later, I believe, will break out from this range, and then we'll have an opportunity. So I don't even want to look at the charts of GDX because I don't trade GDX unless I can make a clear case on gold. Okay, I had a request within the trading room for an update on XLP, and I'll go ahead and update all the active trades. This one's not active. It was stopped out on Friday. Just had our stop clipped. I think it was Friday. I'm starting out here with a 2-day period chart. So this goes back 4 years. Every candlestick is 2 days. This yellow line is very, significant. A very important or solid support level. You go back in 2015 and that capped all these advances. There was one little brief 1-day breakout there, it looked like, but it capped almost all the advances throughout 2015. That's a very powerful level. We broke out, failed, but then finally powered through, and then boom, had a nice trend. You can see there. That terminated in this bearish rising wedge pattern. You can see the divergence at the high. We had divergence across the board. I didn't draw it perfect there, but most importantly is a trend line. I always give, higher weighting to the trend line. So we broke trend, came back down, and then look, this only further validates the $50 level as a significant technical level. We kissed it almost to the penny. You can see that. So that's why that is a very significant level. So like I say, support is support until unless broken. We're extremely oversold, and we may be in the early stages of a new bear market. There are a lot of sectors and stocks rolling over, and we are, this will eventually get taken out. But right now, XLP, and these are consumer staples, these are defensive issue companies. They're down 15% off the highs in relatively short order at support. You can see we may have a little bit of bullish divergence forming here on this 2-day period chart. So I like it. It stopped out. I'll make a post as soon as possible in the trade on the front page of the site to remove it. The stop was any move, I guess, under 50.45. That's why I had an alert on Friday. You can see that we hit that level. Story of my life. If it was a little bit lower, we wouldn't have been stopped out. But a stop is a stop, and I didn't modify the trading plan before, so that it's going to be removed. It's just also, why it makes tracking performance tough on the site. Other than the time involved, I have multiple price targets. So, was this a profitable trade or an unprofitable trade? Well, it depends. Were you targeting T1? Did you book profits there with the intent to recycle back in on a pullback? Or were you holding out for the full position on T2? If you were, then you're stopped out for a loss. If you took full or partial profits there, then you were profitable in the trade. So either way, it stopped out, but it was, you look here, it's really been holding that level, that 50.44-ish level. And again, I just showed you $50 being the key support level on that long-term chart. We have a bullish crossover here on the PPO, very oversold. Last time we were oversold was right here when we went long in the breakout of this falling wedge. So I like this one, unless the market craps out this week. And again, earnings can, things can go either way. But if you're looking for, going long or holding on to this one, if you gave it more room, the targets and stops I give are just suggestions, what I see based on the charts. So if you gave it a little more room, I really like it up there at about 52.25 to the bottom of that gap. And if it can get above there, I still see potential to head up to that second target. So I do like XLP from where it's at, and may even add it back as an official trade. Sometimes I'll do that. If a trade stopped out, I'll stay on it. If the charts still look good, I'll add it back as an official trade idea. A couple others to cover. Let's just go over all the official trade ideas and we'll wrap. I'll try to run through these fast. These are the remaining long trade ideas. CVS, we already hit the first target, fell just shy of T2. You can see that there. Still profitable, has been since entry, looks good. I like it. I see the PPO turning up at the zero line. So I'm still, I'm still bullish on this one. Here's what it looks like on a daily chart. So it has potential anyways. That's, again, an active trade. Still long, still looks good. If I didn't think so, I would tell you. GE, GE looks good. I think this one was based off the daily chart. That was an old target. Beautiful entry, beautiful falling wedge, just a nice looking pattern. Broke out, very impulsive move so far. We hit the first target. Then the next day gapped up above T2, T1, which was resistance. Came pretty close to T2. It needs to pull back or consolidate a little. That's a pretty strong advance. So I still like this one. Any pullback to that T1 level, the actual support is 13.95. I had my target set just 1 penny below because I figured we'd come up pretty quick and probably hit that level. So I didn't do much of an adjustment on the target. So just FYI, any pullback to just above 13.95 looks like an objective entry with a stop not far below. And I still like it up here to T3 over time. Again, and of course, GE will depend a lot on what the broad market does. IEF, I was asked for an update on bonds today. In my last update, I pointed out, that this we had support here and we may have another thrust down here. I still like the charts. As long as this stop isn't run, remember we're collecting interest. This is a bond ETF, so we're getting paid to stay, and it's reducing our cost basis. And I might have to do an adjustment to the targets based on that or the stops. But as of now, I'll just leave them there. So the stop is any move under 100. You can see what I'm drawing here as we head lower. Any new low, we're about we maybe made us, yeah, we slightly took out those lows today. So technically we have divergence, but it's unconfirmed. So I can see, a little more downside here, possibly then a reversal and put in some nice bullish divergence and then go on to break out above this downtrend line and go up and hit any or all of these targets. At least this first target for now I still favor, but you might have to just be a little patient with that one. And again, remember guys, this is a means of asset allocation. So if I'm wrong on my equity longs, and the market really starts to take a big leg down, well, first of all, I'll probably be stopped out, before it goes too much lower. But normally we saw it a little bit today. The market was down, and TLT was up 0.4%. Usually get a flight to safety in the bonds. So there's my outlook. If TLT, and it may come all the way back down here, this is a really good support level here. It's at 115.56, give or take. You can see these two reaction lows from late 2016, early 2017. But that one already hit the final target. So, would I buy it here? There's some support right there. Um, I'd probably hold off. But if you're holding on to these, and that's why I'm sure I was asked for an update. Again, I see minimal downside before another bounce up, and again, you're getting paid to wait. Plus, it's a way to diversify your portfolio, relatively low risk government bonds. LIT, lithium ETF. Still looks good. Divergent low. Here's that falling wedge breakout. It's back testing that 3220 level right now. I must have put where are the price targets on this? Okay, there's the targets, 34.48's T1, T2's 35.98. We already hit a high, I think it was 34.14. So it came close so far, pulled back to support. I still like the chart. You can see the bullish divergence, the falling wedge, so the case for going long there. If it comes back any lower, here's the next support, 32.39. But as of now, I like it. Not much else to say on that one. Again, a lot of, if you get a major meltdown in the market, a lot of things, even if they don't have a high correlation with the market, and people hit the sell button on just about everything out there. But right now, based on this chart, I favor more upside. Okay, now on to the shorts. There's only 3 official short trade ideas at this time. Netflix, which has been official short trade since up here. We shorted either in the wedge, I think inside the wedge, at the very least after it broke down. We hit the first target for a quick gain. That was a nice profitable trade there. Reversed off T1 as expected at the time. And so far we pushed up, made a marginal new high, which is another divergent high. Simply an extension of the existing divergences. PPO is rolling over. RSI is rolling over. That negative divergence has now been extended. Very much like this as a swing trade. Still very much believe it's coming down to T3 here. That's the first of the uptrend line or the 232 level. Because remember, uptrend lines are dynamic. Their price comes in a higher and higher level every day. So if it takes a little while to get there, you're going to hit this yellow trend line first. But and like everything else, don't fall in love with it. That's where I think it's going now. This one's already reported earnings. I like that too. Earnings are out of the way. We're comfortably below the stop right now, and not much else to say about it. Just if you have patience on that one, I think it'll pay off. And if it doesn't, then like anything else, it's only one piece of one egg in a basket of many eggs that you should have in a portfolio. Diversify. Don't put all your eggs in one basket, meaning one stock or one sector or anything like that. NKTR, Nectar Therapeutics, looks good. Hit T1 a while ago for the first profit, or I'm sorry, first profit target for a quick gain. Actually went sideways for a while, then boom, came down, hit it. Went sideways again, finally broke below, and it's traded below. We had an intraday break, but now we've had 1, 2, 3 red candles below, which increases the odds T2 will be hit. It's still very much profitable, and I like it. Chart looks good. Sirius, this one can go either way. I'm going to get to the 60-minute chart in a second. This is the last trade, official trade on the site, and then we'll wrap up here. There is some support here. I should add that level. So you can see we've broken down. We had a divergent high. PPO is still above the zero line, pointing up. This one could hold up here. So I would hold off if you're not already in it. Now, if you're in it, we hit the first target quickly. That was back here. We short on this bearish rising wedge 60-minute chart. First target was hit for a quick gain. Second target was hit almost to the penny, reversing right there. I had a second target of 610, and we hit a low of 608. So there you go. Nice placement there. You can see I put that target a little bit above the actual support level, which was 606. That helps to do exactly what happened there. Sometimes when all eyes are on a level, I think it was a well-placed support line, but what'll happen is the buyers will step in earlier. The market makers will roast those people that are trying to hold out for that last penny. So that's why I make an adjustment, set my second target 4 cents above the actual resistance level, and we reversed 2 cents above it. It's trading sideways cents. Like I said, if you're still long, stick to your trading plan. The charts haven't changed, but I can't make a clearly bearish case anymore, so I wouldn't add to this one here. I would just maybe consider lowering your stops if you didn't already book partial or full profits at T2. T4 remains the final target for now. And we'll wrap it up there with just two other quick trades that I've covered recently, unofficial trades. Tandem, small diabetes company. They make pumps, medical devices. I have this potential third target. I actually sold my shares on Friday. It's still at the same level. I added another resistance level here at 754. You can see a lot of reactions back here, and I'm seeing the PPO starting to curl down. We're very overbought. So I just want to let you know I booked profits on this one. It was an unofficial trade, but shared several times in the trading room. I think it was on a breakout over 343, and from there, I mean, we've had some nice runs. It was up about 120%. So that's what low price stocks will do when you get it right. Another one like that was Zine. Zine was a breakout over, posted as an unofficial trade idea over 439, I think, if I remember right. You check that, and it ran right up there to that line I had, which is a gap backfill there, or to that reaction. That was about a 30% move up here to this reaction low. Starting is quite stretched, still above trend, but it would be another buy, I think, on a pullback here to 440, the 440 area. Right now, I wouldn't chase it, but I just wanted to point that out. And then also a stop below if you are along that one. Okay, guys, long video. I wanted to cover a lot. Those are the things that stand out to me right now. It's not all inclusive, but I've done an update on all the trade ideas as well as some of the potential trade ideas coming. So as always, if you stayed this long in this video, remember you can press the fast forward button on the playback speed on YouTube, go into the settings, increase speed. It'll shorten this video down for you. And I'll follow up if any other trade ideas that I missed, anything that stands out. I'll be sure to post a chart tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.